Mark Selby, CEO of Canada Nickel, advancing the Crawford Nickel project and unlocking the Timmins Nickel District.
Mark Selby, good to see you. I haven't seen you since yesterday, but we're here to talk specifically about Canada Nickel Co. It's 2 months since we had a proper catch up. Okay, so a lot happening at the moment. Let's start with today's news. Deloro, what can you tell us?
Yeah, so the Deloro is the first of what we expect will be 7 additional resources. That'll be complete by the end of March next year. And that's on 10 times the geophysical footprint that we had at Crawford. Very, very happy with where Deloro came out. 80 million tons at 0.25 indicated, another 350 million tons at same grade inferred, which is actually an average higher grade than Crawford. It has shallower overburden. You know, if you add that indicated and inferred together, you're looking at over 1 million tons of contained nickel, which again would make it, one of the largest discoveries of the last 20 years. We've talked about we've talked about the potential at Timmins Nickel District. Now we're actually unlocking it, and it's really about building what we think could be the world's largest nickel sulfide district.
Right. So Crawford was already in the top 5 in the world. Is that right?
Second.
Oh, how dare I? You got a silver medal so far.
Yeah.
But with the development of the district, this is the first of. So how many targets have you got?
This will be 7 resources on top of another half a dozen discoveries that we've already made, and then we expect to make another half a dozen or so discoveries during this program.
And it's kind of homogeneous in the sense it's more of the same, so it would feed into the same kind of infrastructure that eventually gets built out there. Is that right?
100%. What we're basically, the real upside here is everything that we engineer for Crawford, that process plant. The idea is that we've engineered it once, and then we can effectively cut and paste with a few tweaks around these other deposits. Obviously, there's still a lot of work to do, but the opportunity is there. And if you look at companies, like First Quantum, when they first got going in the African Copper Belt, they basically had engineered one process line and took it around to a bunch of similar deposits in the Copper Belt, and until they decided to blow their brains out on Cobre Panama, that was a very, very successful strategy for them. And again, after this week's, BHP news, the world needs a new sulfide district.
Well, let's talk about the BHP news. It's a slight segue, but let's go for it, okay?
Yeah.
And people seem to be unsure, or perhaps how to read that. BHP shutting down its Western Australia nickel projects until at least 2027. What's going on there, and what's the impact for companies like yourself?
Again, on the surface, you think, oh, that's bad news. The nickel market must be horrible. In fact, it is absolute best news for us. It's really an indictment on the cost structures and the underinvestment that those assets had for 20 years under BHP's stewardships than it is anything about the nickel market. If you can't make money at $7.50 a pound nickel, you shouldn't be in business. And that's where BHP is today. The reality is, if you go back 20 years, there were 4 nickel districts in the world. Nickel sulfide districts were, and there was a sort of a dozen laterite projects that provided most of the world's nickel. It was Sudbury, Western Australia, Northern China with Jinchuan, and then Russia with Norilsk. In today's geopolitics, Norilsk, gone. Jinchuan, China, gone, right? Western Australia now shut down. And then you've got Sudbury, and the other news of the last few weeks, which didn't get nearly as much attention, is Vale Base Metals put out their updated copper nickel strategy in terms of what the blueprint is going forward. And it's obviously there's a much bigger focus on copper. And in terms of what's going to happen in Sudbury, it's basically going to climb back about halfway to all the production that they've lost. And again, Sudbury production is down by half versus where we were 15 years ago when I was there at Inco. And Glencore is just finishing to ramp up their Onaping Deep, and that's it. So what we're getting out of Sudbury is it. So the world needs more clean green nickel, and what we have in Timmins is one of the few large, we think one of the few large scale places where you can get it.
Okay, so right, the clean green nickel suggests that there's a flip side to that coin, which is obviously the Indonesia, Philippines, China triumvirate there. West, you're saying that the OEMs, the West, needs this clean. I think you used a phrase recently. You could, sort of slightly anti-blood nickel. nickel supply from somewhere. It's not going to come from Western Australia now, it seems, certainly not the quantities as it has been in the past. China and Russia clearly out of the mix geopolitically, so that leaves Sudbury to kind of pick up the pieces here. So as far as you're concerned, the news out of Australia, good news for Canadian miners.
100%. So, us and the other development projects, that are, can come online later this decade, the runway just got that much clearer, and, create for consumers just, far fewer choices in terms of where they can get that kind of nickel from.
Right. Okay. So just want to be clear on that one. Okay. Let's kind of maybe skip to some of the other things that you're going. A lot of moving parts to your story at the moment. Okay. Recent bridge financing with Oramet again. Why did you do that?
So Oramet, we've done this 3 times before, each to a major strategic event. The last one was the Samsung SDI investment. And so, again, we've timed this bridge investment for 6 months, which takes us to the end of the year, the start of next year, which we expect to have our joint venture equity financing in place. And as part of that, that'll provide, the capital to continue to advance the project through to a construction decision mid next year. Oramet's been a great partner all the way through. And, for a non-cash flow company, those terms are, quite attractive. And again, I think reflect the kind of support that we've had from Oramet over the years.
Okay, so they're comfortable doing these deals with you because it's into an event. Now, that event being equity investment, you sound pretty sure about that one. You've kind of given yourself a deadline. So how are you going to do it?
Yeah. And again, equity at the project level. When I talk about joint venture equity, it's really about, not dilutive at the top go. Again, as a person who's got most of their net worth in this company, what we want to avoid is dilution at the top go. What we're really focused on is getting that joint venture partner just for Crawford. And so, right now, in terms of the funding package, we're targeting, close to $1 billion of equity. The refundable tax credit, reminding people the refundable tax credits that we get from the critical minerals credit and the carbon capture and storage credit, that'll be over $600 million US of capital, which we believe can structure in a way that it would be project equity. We've got Samsung SDI already in line. They have the option to buy 10% of the project for $100 million US. And so we're looking basically to solve for $300 to $400 million. And if you look at the valuations that the Japanese trading houses have typically bought into these big base metal projects, at that kind of valuation, it's easy to get to a point where you could see circa, $300 to $400 million come in, which effectively gets us our equity check to get going. As well, that does not include any one-off government financing. And again, we've seen more and more governments, tariff walls going up in the U.S. More and more governments are more focused on critical minerals, as a national security issue. And so, we'll see if we're able to get even more government funding, beyond that $600 million in refundable tax credits.
Right. And again, you've got a couple of banks working on this with you and on the debt and the equity side. Just be clear about what the options are. You kind of mentioned some maybe metal traders in there or alternative financings, which are going to be non-dilutory at the pubco level. What are the options on the table for you? Just be clear about that.
The primary options are going to be the Japanese trading houses. This is not necessarily going to be Glencore, Trafigura, because sometimes those financings that happen, below the top co-equity, by the time you put on, 3 or 4 different components, can end up being just as dilutive, to the existing shareholders as possible. The Japanese trading houses, they buy project level stakes. There are other entities that are interested in doing project level stakes. And so, we're quite confident that we'll be able to get one of these guys over the line, and be in a position to continue to drive forward. Again, we've got, great advisors with Scotia and Deutsche Bank. Those are, big banks who typically don't play in our sandbox, and they play in with the bigger kid sandbox. And so, to have 2 companies who've been along now for, almost 2 years in terms of helping advise us, I think speaks to the quality of our team and project. And then on the debt side, we're working with Cutfield Freeman. Again, there's a handful of people who do the project debt advisory, and that is going very, very well. Again, really want to underscore to people, government want critical mineral projects, to advance. So basically all of the different envelopes of government funding, that are available, they're pushing their bureaucrats to deploy as much capital into the sector as possible. And the sad reality, the mining space hasn't given them that many projects, to get to the point where we have it, where we're, a year away from making a construction decision. So on the debt side, again, those discussions are going very, very well, and we expect to be able to get the full debt package that we want to have in place, have that in place by year end as well.
Okay, you mentioned something earlier to me in terms of when we're talking specifically about the Deloro, which is the kind of first of 7 new resources expected to be published.
Yeah.
Before the end of first quarter 2025, right? So there's a lot coming down the line here, and you say, well, maybe some of the knowledge can be used there. Homogeneous, it's more of the same under the ground. Therefore, I'm wondering who owns the sort of intellectual property to this. If are able to kind of take the learnings and the money and the time and etc. spent on developing Crawford, who owns that? Does the Pubco own that, or and how much of it can actually be used going down the line?
Yeah, the Pubco owns it, and again, they're going to be of the 20 plus targets that we have, that we think we're going to have 20 plus deposits at some point. It won't necessarily work at everyone, but it will work at the bulk, and we've already tested it at Reed, and our flow sheet work. We've already tested it at Man Northwest, and it's worked. And so, the opportunity to have sort of that core base of ultramafic knowledge, because again, the biggest high-grade discovery of the last 20 years was only 250,000 tons. To go back to a 1 million ton high-grade sulfide discovery, you have to go back to Voisey's Bay 30 years ago. Nickel market's going to be a 5 million ton per annum market in 2030. So your choices are Indonesian laterite or these big, large-scale ultramafics in places like we have in Timmins, where you have all the infrastructure in place. And that's with the announcement on the ExploreCo, and you're going to see some more announcements as we go through the remainder of the year. It's really, we have a massive portfolio of assets, right? And a massive portfolio of intellectual capital that, our company has, that very few other companies, I would challenge any of the companies have in the nickel space right now. And so, with ExploreCo, we already have an 80-20 joint venture with Noble. We basically added in the eastern properties to the east of Man. There's a natural geographic clustering that's there. And in return, there's a whole hodgepodge of one-off properties, surface rights, for various pieces of Crawford. And we basically cleaned that all up as part of the transaction. So, we gave away 20% in the eastern properties. We've completely consolidated everything we need around Crawford, which will make it that much easier to start construction when we want to start construction a year from now on Crawford. And again, as we go through the remainder of the year, we're looking for ways to again, unlock value in a way that's not dilutive to Topco shareholders.
Right, but let's be clear what that means, because there's, like you say, you've got lots of optionality on the table. You've got lots of targets, and make lots of discoveries, and a balance sheet of a certain size, right? So we're trying to get Crawford over the line and show people that the market wants it, the market will fund it, and it's less dilutory way possible, and there's government money potentially coming in for tranches of it. But how do you take all of that and package it up for another and say, well, look, here's the template. Now go off and do it yourself. We'll take a big slice of the pie, but you go off and do that yourself. It's not that hard. You've got a balance sheet to do it, or you've got access to capital to do it, because you can't do all of the above yourself, can you? So ExploreCo is like one of many, presumably.
Potentially, yes. Yep.
Potentially. Yeah. Okay, fine. And so then my question is, how does that benefit Canada Nickel? What is the value creation? What form does it take? How long does it take? What's it worth?
Right. So, as we create different subcos around some asset clusters, that makes sense. Again, what it allows us to do is bring in capital to the parent co that's not dilutive at the equity level. 2, it allows us to bring in additional people, additional resources, to help unlock it. Again, our team has to stay focused on Crawford. We're doing the regional exploration program, but that's we have to maintain that focus with the people we have. And then third, from a shareholder perspective, we've now set up one, and we've got the downstream co. There's some other co's that we're looking at, and again, at the right point. Today's market is definitely not the kind of market we want to create a new public co, but we will get to a point where junior development, will get funded again. And oh, by the way, we've got a whole, pipeline of different entities, that we can then, dividend out to our shareholders, and create a large amount of additional value, well beyond just one nickel project or a bunch of, resource stage resources in the company.
Right. Okay. It'll be interesting to, I guess you're right. First things first, get Crawford over the line, get the feasibility study out, get this equity at asset level in. People will be moving, I guess, a little bit closer to believing this thing is doable, because the numbers have seemed all the way along extraordinarily large, and people are like, well, how does one build a
$2 billion,
$1 billion, $1.5 billion, $2 billion dollar project as a small, junior?
Today's market, with the government funding that's available, is a once in a generation opportunity to create multi-decades worth of value with a very, very small amount of equity capital. The market doesn't understand what the size of the opportunity in. There's only a handful of companies that are positioned to be able to take advantage of it, and we are one.
Okay, so I'm hearing there is the drills are turning. You're off doing the exploration, but you're very much focused on getting Crawford over the line. You're optimizing that through the feasibility study process with
and we've gone beyond. We've now gone beyond the feasibility study. So talked about the financing stream, which is one of the key focuses. The engineering stream is one of the other key areas of focus. So we started what's called the front end engineering design back in April. The feasibility study has only about 10% engineering. They basically do enough so they can come up with an estimate that's within a range. And that's their, we're going through the process now of taking all the engineering up to about 30%, in particular for items where we have to place long lead orders. We understand and we have enough information to be able to place those orders, when we're ready. That's going very, very well. Again, it's less than 5 years. We're still less than 5 years since we started this company with the 5th drill hole. So, unlike a project that's been around for 15 or 20 years, probably had 3 or 4 different studies done by, maybe the same or different companies. We've gone through this process in record time. And so there's still lots of optimization opportunities available. And again, this detailed engineering phase gives us a chance to unlock, some of those optimizations. So, we're very, very happy with, how that's progressing, and we're looking to have, that complete by September. The other big stream is on the permitting side. So we're in the second phase of the federal process right now, which is the environmental impact statement. We're originally targeting mid-year. It's now going to come in September. But again, that's 5 years to get to phase 2, from when we started with the 5th drill hole. So we're very happy with that. The government has a maximum of 365 days to come back with an answer. We'll expect that they'll come back a little earlier than that. They've made lots of noises around it. And that third phase is the one phase the government actually can move a little more quickly. And so, we're on track to get those permits by mid next year. We've commenced all the provincial permitting that we need to do to be able to coincide with the receipt of the provincial permits we need with that same time frame. And again, our team permitted Dumont back with our last company, so we've got the skill and experience to be able to do it. And again, it's far easier today than it was 10 years ago. I'm going through the same process.
Okay, I'm looking at your share chart, and it's like I guess all nickel companies, and quite frankly, all explore codes and developers in the Canadian market at the moment being hit by sort of a wave of uncertainty in the markets. For investors that are interested in fundamentals, whether they be contrarians or not, it kind of feels like what they want to hear is the supply-demand fundamentals are working for nickel, but perhaps are misunderstood. You and I, I'll let you have a rant mainly about some of the banking analysts a few months ago, where you kind of called them out and said, that they're perhaps not seeing the market or understanding the market enough. Can you kind of just maybe revisit that for some people who kind of missed that? So I understand where, again, your confidence comes from in terms of understanding China inventory levels, Indonesia production levels, and potential bifurcation of market between clean green nickel and we'll go with your title, blood nickel, where perhaps the standards are a little bit lower, and perhaps automotive car manufacturers perhaps can't pretend to be arm's length to what's going on over there in terms of how that is mined. So can you summarize that up for maybe people thinking, well, is nickel an opportunity or not?
Yeah. So, in December, January, if you went, read through all the headlines, that emerged at that point in time, you would have thought, Selby's has to be a masochist, because who would choose to spend time, in an industry with this kind of outlook? Again, that was culminated in the mid-February announcement by BHP, who said, we don't see the nickel market in balance before the end of the decade, and our best case scenario is that we are going to be balanced by 2026. 9 days later, the leading nickel analyst goes to China and says, the Chinese have been undercounting their stainless production, which, effectively undercounts their nickel demand, not just by a little bit, but by 150,000 tons. That's 5% of where we sit today. And so when you then drop that into the numbers, it's like, okay, the market is not in as much surplus. And again, I've been in this business for 20 years. It was frustrating me to tears just in terms of looking at this commentary, because the surpluses that they were talking about, there are physical signs in the market that you see when you're in that kind of surplus. And we've been in that kind of scale surplus at a few points over the last 20 years. I know what that looks and feels like, and we were not there. And again, let the data speak. The INS, the Nickel Study Group, is a UN-sponsored entity that just counts the numbers. They've just put out their numbers through May, and for the last 3 months, the market's actually been in a small deficit. Why? Analysts don't always underestimate nickel demand growth, and they've got rose-colored glasses on in terms of just how much nickel Indonesia can produce. The reality is, Indonesia controls more of the nickel market than OPEC did at its peak. We all know what OPEC did back in the early 70s with oil prices. Indonesia is not going to do that, but they're going to manage it, because it's the most important thing in their economy right now is nickel and stainless steel in terms of their trade economics. And so they are not going to kill the cash cow. They're going to make sure they milk it for as much as they can. And the other reality is laterite deposits are very, very easy to high grade. And so they've been high grading these things for 15 years. And if you look at the environmental devastation that's happening, they are not careful stewards. Those companies mining those deposits are not careful stewards of their resources. And again, Jim just put out a new note about a day ago on the nickel market, and highlighting the drop. The average NPI grade has dropped by more than, that's of the stuff that's produced, has dropped by 10%. What that means is, one, the ore grade has dropped relative to the amount of iron. And again, there's not just grade, but there's also chemistry. And so it's very clear that they're running out of, some of the better chemistry material they need to make the nickel pig iron. And all that's doing is driving up the cost floor. So, Jim's comment, and I don't disagree, was that, that floor is probably sitting around $16,000 a ton, which is, effectively where we bounced off in February. And getting back to the beginning of the conversation with BHP, if you cannot make money, if you haven't designed your nickel operation to make money at $16,000 a ton, which if you had said to me 10 years ago, the bottom is going to be 16,000 of the 2020, the 2020 cycle, I would be, excellent, jumping up and down. That's where we are. There's a big floor in the market. And for those of us who've got cash and all-in sustaining cash costs well below that number, again, we're about to be able to build projects with a massive amount of government support that reduces the amount of equity that's required to build these projects to a point that people haven't seen since World War II. That's the opportunity. The market will wake up to this at some point. And when it does, let's see what happens.
Okay. But a big company like BHP, they're a big company for a reason, right?
Yeah.
If they have looked at the data and made the call they have, you can sort of see why the market's slightly spooked at the moment.
Yep.
They're going, we're going to be flooded by Indonesian nickel. You've explained the why not, and you've explained some of the issues that BHP face with their kind of long held assets. It's more I guess structure, finance, heritage or legacy, I should say, not necessarily the market conditions driving that one. But Indonesia as the OPEC of nickel these days, you strongly believe that the grade, the chemistry will kind of work in the favor of Western nickel companies going forward.
Yeah, that cost floor in nickel is only going to go one way, and at the pace that which they're mining it, that floor has been moving up fairly quickly. And again, when you're on the left, on the good side of the cost curve relative to a cost floor, that's several dollars a pound or 10,000 tons higher to $10,000 a ton higher than your cash cost. That's a great place to be, and is a recipe for good multi-decade free cash flow generation.
Right, and I always do it every now and again with you. It comes back to that one because again, people new to this, they'll be looking at it and going, "Is that the only way that low grade projects, sulfide projects, are going to work, or would they have worked anyway?"
They would have worked anyway. It's basically we need large scale nickel. Again, a 1 million ton high grade discovery, which the last one was 30 years ago, is tiny in a 5 million ton market. We need multiple large scale ultramafic nickel deposits, which also can capture and store carbon, and can contribute to removing carbon, which again seems like a pretty important thing to a lot of people these days. These are the deposits that will do it. The scenario with Indonesia, the way it's setting up is creating a perfect environment for us in terms of a real alternative around clean green nickel, because it is really blood nickel in terms of the worker safety, the impact on the environment, the impact on the communities that were there before, that have seen their livelihoods totally wiped out. That's not what people want to do in the energy transition, and that's not what consumers want to buy. And again, all of the car companies who kind of like close their eyes a little bit in terms of what's happening further up in their supply chain, are going to have some hard cold reality hit them in the face, and again just helps perfectly position us for the next few decades.
Right, and just to finish off, talking of us, maybe if you don't mind giving me 2 or 3 reasons why you think that investors should be investing in your company right now.
You've got 12 months of catalysts coming, permits, finance, unlocking 7 new resources. I challenge you to find another junior mining company that's got that kind of portfolio of resources coming, and we're unlocking an entire new nickel sulfide district. We've got a nickel market that, again, was a capitulation moment, 5 months ago. We're still sort of climbing out of that capitulation moment, but you want to be buying commodities when they're out of favor. And, then you've got, again, big pots of government money that want to make that happen so that you're getting free leverage on every equity dollar you put into companies that are able to take advantage of it.
Mark, good to catch up with you. Stay in touch. Let us know how you get on.
Sounds good, sir.